All right, so let's jump in and get started. Welcome everybody to the Bookmap Academy meeting. Thanks for coming. What the Academy is all about, if you're new for the first time here over on our Discord channel, we're also broadcasting it on our YouTube channel. However, on YouTube channel, you might want to come over to our Bookmap Discord room and check it out over here and sign up for the program. Just let me go through the details here. So just to cover the newbies interested in this Bookmap Academy, go to bookmap.com, click on the More button here, and you'll see the link right here. Okay, Bookmap Academy under Community. You can apply for it here, and then you can go through the steps. You can get Bookmap for free. You can get data for free. You can become a coach. You can become a streamer. We're offering a piece of the pie to you. And we want you to become a better trader using Bookmap and order flow. That's part of the plan here. So go through the details in there. Hope you find it helpful. I think a lot of the guys over here in our Academy room found it extremely helpful. I mean, we're seeing really excellent content. Especially the last few weeks, guys, you guys have really ramped it up, and it's looking really good stuff, really refining and honing your craft. It's really excellent to see. Anyway, let's go through a couple disclosures and then we'll jump in. General disclosure, all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. The risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss, is not suitable for all investors. Past performance is not necessarily indicative of future results. All right, so let's jump in here and start to go through some content. There's a few things to show you, actually, housekeeping that I need to show you, and that is here from bookmap.com. Click on the More button and go to our knowledge base here, and then click on add-ons over here. I'll put this link into the chat for you. So let me I don't have Bookmap open at the moment. I just closed it. So I want to show you this though, because we have this new product that everyone has been wanting for the ES. Check out this algo in here. It's been in here for a while. It's starting to turn on and off a lot more frequently just recently, so it's becoming less of a problem, but it's still a pretty major problem. It blows out the heat map. All right, so we have a new algo or add-on that will fix it. Okay, so it's called Trader Map Lite. Here is the link, and it's all you have to do is open up your Bookmap. And then up in here, let me show you. Okay, I don't have it here. Yeah. All right, it's not quite showing. Well, you'll see up here under the studies configuration right here. You'll click on that, and all you need to do is scroll down to the bottom, and you'll see the install for the new Trader Map Lite. It will turn this heat map into here, into this one over here. It becomes much more useful. It's free. It's included with Bookmap. Get it, add it in. A couple of caveats right now. One is you will not be able to see your stops and icebergs information if you have that within your Bookmap, nor will you be able to trade from the Bookmap chart with this add-on. So that's a problem. But we are working on it, both of those issues, and it should be done by the somewhere mid-end of August. We should be finished with that. This also works not only on the ES, but it works on the NQ, the MES, and the MNQ as well. So 4 different instruments. So I know you guys have been wanting this. We just released it today. You probably got the digest from Bookmap as well. All right. So let's jump in and let's see who you were going to cover today. At the top of the list, we had, let's see, Stan, you had a few different guys here that we went over last week, though. So,
Yes.
yeah.
Yeah.
So I think we'll start with, actually, let's see here. Is Crash in here today? Let's take a quick. No. Oh yeah, he's here. Okay. Oh, we got Malak is in here. Okay, great. Well, we can start with you. And we wanted to cover you. You've been making a lot of content, a lot of great stuff. So let's see here. Where is it here? Yeah, here we go. Okay, so Jack covered you. He was not able to make it today. And we can turn on the mic for you if you want to go over something. I believe we tried this before with you, and we could not. I think we're at work or something. But yeah, let's see here. If you are able to speak. Malak, the mic is yours. And if you want to walk us through maybe your trade in here, but you can see that Jack gave you quite a bit of feedback here. So I'll give you the file here.
Hello?
Yes. Hello, Malak.
Can you
How are
guys
you?
hear me?
Yes. Loud and clear. Maybe your trade in here, but you can see that Jack gave you quite a bit of feedback here. So maybe you have your YouTube open. Can you maybe mute that? I can hear that in the background. Yes, loud and clear.
Hello, I can't hear you guys though.
Okay. That's a problem. Yeah, you're on a pretty big delay in YouTube.
Yeah, I can hear you through YouTube, but I can't hear you through my headphones and stuff.
Okay.
Like my input, I can't hear you.
Okay. Well, Malak, let's see. Maybe Dan and I can try to get you up and running for next time, because this is there's massive delay. This is not going to work. But we need to get you connected in with your mic and your speakers in Discord. That's the way to get it going here.
Sorry guys, if you're talking, I can't hear you.
Yeah. Okay, so Malak, you'll hear it on YouTube in another minute or so. But yeah, we'll yeah, you can check the messages in the Bookmap Academy room. Okay. All right. So I'm going to move you to the audience, and then Crash, invite you up on the stage. It's been a while. You've been away. And let's see here. There you are. Your mic is still muted at the moment.
Yeah, I'm trying to silence some background noise here. Give me 10 seconds so you don't hear everything.
So you yell at the kids, basically, is what you're saying. Okay.
Well, it's computer noise. I don't know if you guys hear all the clicking in the background or not.
Okay.
But I'm here.
Okay. Excellent. Excellent. Let's get started. So let's see here. I just had one image for you to start with here, because you made 200 points out of it. So let's jump in and run us through this, Crash.
All right, let me
This was today, right?
Yeah, this was today. So this was what time was that? I actually got like I got like a couple 100 pointers plus that 200 pointer and like a 50 pointer today. It was a pretty big day. So
wow.
At 8:45, yeah, I just needed to make sure I was sure on which one we were looking at. Okay, so we had for me, I have a little cycle methodology that I use. And so the cycle methodology said that for this multi-day cycle, we needed to go up pretty heavily to hit some of our positive cycle statistics that are based on a 12-year history period of time. And so this was part of an ABC pattern up. I don't know if you guys remember seeing the beginning part of this leg, but it started around 7:15 Pacific Standard Time. So I guess it's about 10:15 Eastern
Yeah.
down there around the low of 18,877. And we made a move up to a new high from the prior open or right before RTH, the high before that. And then we had a little pullback down once we hit up there at the 19,279 range. And then we had a pullback down to about the 141 range. So what you're seeing here is the second half of that ABC pattern up move. So basically it was a continuation trade, a long pullback, and then another long. And if you do like a price projection, if your charting service has that, we basically on that ABC leg went up to about a 61.8% price projection, and off of a Fibonacci level, we actually went to a minus 23.6 up there at that high. So I wrote it pretty much from the bottom from 715, legged out there at the midpoint of that ABC, waited for the pullback, and then I got long again, and that's what you're seeing here.
Okay. Okay.
Does that make
Great.
sense?
Yeah. Yeah. I mean, makes sense to me. If anyone has any questions, please put them into Discord there.
I mean, you can see, you don't see the whole chart, so it's kind of hard to see the entire thing, but you can see, just like I always do, I'm using, Market Pulse VPI to help me with my entries. And you can see that we had buy volume there come in right after that first Market Pulse VPI spike, right? And so it's just, like what I always say, Market Pulse is a beautiful thing. And so I can't speak enough about using Market Pulse and as much confluence as you can get. Obviously, I had one of my own ATR shifts down there as well. So I had Market Pulse VPI, I had ATR shift, I had liquidity zone. So it was just a fantastic trade, and going up from my AM low to my AM high price projection just gave extra confidence to that trade.
Yeah, it's fantastic. I mean, one of the things like this was kind of interesting. I know AJ's in here, so welcome back, AJ. It's really great to have you in here. That it's a little cryptic. I mean, you went through the description here on what you did, but you can't see it necessarily in the chart because the ABC pattern. This is the BC leg basically, and what kind of stands out to me here is your decisions in here, here and also here. It doesn't look great, but you have to think about the context of what you're looking in. You're talking about these big legs up, a pullback, and then another big leg up. And it's right in here where you're kind of looking for that. So you're already in a big uptrend. And this is the golden part, and it's not necessarily here on the trade. This is a pullback within the bigger trend, and this is based off of your long-term studies. These are the swings that you're looking for. Then you're looking for your market pulse and other confluences to fit that bigger picture, right?
Yeah, and I apologize. Most of the time, I try to give the bigger picture, and then
I don't mean to. I'm not. It's not a criticism.
So yeah. Well, I know it's hard to, just post something like that and everybody understand it because you don't see the whole thing. So usually I give more than one chart. But when I'm trading really fast, when we're clicking at 30 points a minute on the NQ, sometimes it's hard to take the really good pictures and spend a lot of time charting them up until the end of the day because things just happen so fast in
Sure,
the heat of the moment. So,
sure.
but
No,
if you were to, if you were to pull up your own bookmap chart and just, hide my chart, but if you pulled up your bookmap screen and you showed the time frame from 10 o'clock Eastern, right, to 10, 11, 12, till 13:30, if you wanted to do that, you'd be able to see this ABC pattern up.
yeah, I just before the session, I closed my book map. I was worried about
Okay.
some memory. Anyway, it's a pity because it was a great day today and yesterday, and I should have maybe kept it open, but no, it's not a criticism on it. It's just like um, there's more behind it than what's visual,
Yeah.
and it's part of it's a part of trading. I mean, like there's going to be a lot more behind it, and it gives you the confidence to look for these things in here, and to take a decision. It fits your trading style and your pattern. Um, on this chart though, it doesn't necessarily, it looks like this guy's crazy, why is he selling or buying way down here, and in this move down or in this move down. Well, it's a pullback within the bigger trend.
Exactly.
This has always been the case with your trading. It's you're always looking for going with the bigger trend.
Yes.
uh,
And one of the things that you could do, even if you weren't, you're right. It looks like you're almost catching a bottom if you just take that one picture there, right? And that's obviously a discussion that we've had multiple times about don't catch a falling knife, and sometimes the imagery makes it look like you're catching a falling knife, but in the bigger context, it's actually a pullback with other areas of confluence that let you know that you're, my old saying, learn to earn on the turn, right? You don't want to catch a falling knife and you don't want to catch a shooting star. You don't want to get slaughtered. So there's got to be some confluence at those points that you're getting in at the highs or the lows. And here again, you just can't see everything. But you see VWAP right below you. You came up to one of the VWAP lines. You have a little pullback to the other VWAP line. So you have that confluence between the two VWAPs. You also have liquidity down there. You have the market pulse VPI. It was a pullback to a Fibonacci level also on top of that. I do use some GAN stuff as well. I don't usually chart my GAN stuff just because it's so complicated and very few people really understand it. So I don't really talk about GAN a whole lot on the charts, but there's GAN numbers involved with that too. So, I have multiple layers of confluence when I get into a trade. It's not a haphazard decision.
yeah, yeah, no, that's is great. I mean, um, and you're being really consistent with it as well, and then look at the results. So trade after trade. Yeah, you maybe you have some losers here and there, but you're just knocking it out of the park.
Yeah, I have losers. There's no question. I mean, I'm not gonna try to pretend I don't have losers. Sometimes I make bad decisions. Sometimes I rush the entry. A lot of times I leg in and leg out. So maybe on this particular case, and it just kind of depends on how much profit I have on the day. What the rhythms look like to me. I take a combination. So when I'm looking at the market overall, two of the things that I teach is always understanding where the VIX is, right? And I talk about where VIX is in relation to its current history, where it's been for the last few days. And then I teach understand where it is in relation to some Fibonacci levels, because when those Fibonacci levels kick in, the VIX can start getting more sporadic and it can cause more of a whipsaw type situation. I also teach to always look at when I'm trading the NQ or the ES or whatever instrument, I want to know on a 1 minute time frame how many points per that 1 minute is the instrument that I am trading moving? So in this case with the NQ, this morning we were seeing 20 to 33 points per minute. And sometimes you've got to tell yourself, well, if I normally trade minis and I'm above 18 to 20 points per minute on the NQ, maybe I need to cut that size in half. Or maybe I need to switch from minis to micros. Or if I'm a trader and I'm only got a 25 or a 50K prop account that I'm trading, and I am only trading micros, but if you only have a $1,500 intraday trailing stop, right? If you're doing some prop firm account and you're clipping on the NQ at 22, 30 points a minute, you're going to blow up on a just a very quick pullback, because again, in a 20 to 30 point per minute move, you can have a really sharp pullback on the NQ that can wipe out $1,000. So you do have to be very careful on the NQ. You got to know what the VIX is doing, in my opinion. That's my number one gauge. And the second gauge is, again, how many points per minute, so that if I try to get in on a VPI spike or on a certain level, it's not going to just come slicing through it and take my stops out and eat my lunch, particularly if I'm on a smaller prop account. Now, I don't trade those smaller prop accounts, so I don't have quite that issue with, just having $1,000. But I also, if the market is moving fast and I wanted to take a trade there and we are moving at 22 points a minute, I normally run a 12 point off my particular program, a 12 point trailing stop. And I have like roughly a 78+% win rate using a 12 point stop on the NQ. But when it matches up against a liquidity zone in like one of my ATR shifts or something else, I pull the stop into like 3 or 5 points. So I'm not ever really risking, in all honesty, more than 3 to 5 points on the NQ, because I'm pretty precise at the entry level. So I just don't get, caught too many times. But every now and then I do catch that loser, and it's usually because it's whipping so fast. You got to be careful about that.
Yeah. Sounds good. I think, I don't really, the only very minimal feedback for you, besides that bigger picture. One is try that Trader Map Lite on the NQ now. It's you might find it really useful. You might have to have a couple tabs open because, as I'd mentioned, your stops and icebergs won't show on that chart, but your heat map's going to look real good.
Are you talking about Trader Map Pro?
No, Trader Map Lite. It's a new. We
Okay.
just developed it really quickly due to this ES algo that was in there. But now we just released it. I think this morning, and it works on the NQ as well.
Yeah, I will check that out. I got to be honest. I told you I was selling my house, so I've been definitely gone the last month quite a bit just through this whole process. So I haven't been around quite as much. So I'm a little behind the power curve on just some of your briefings that you've been given during the day to show some of this stuff.
Oh, no issues at all. And happy to have you back.
Yeah, thank you.
Well, I don't have much more to say. Stan, I don't know if you want to jump in here.
Well, that's perfect. You know exactly what you're doing when you're entering about your money management. Yeah, that's great. Obviously, I would love to have more zoomed off the flow, or as Bruce mentioned, but just for my, yeah, just for the corporation about what happened. But you know what you're looking for.
Yeah, totally agree. I do try to give it most time. I'm sorry I didn't do it this time.
Yeah,
But it definitely helps. So I agree. I'll try to be a little bit more careful about that.
That's it, Stan?
Yeah, that's it. Perfect. Thank you.
Okay. Well, yeah, I know you've got other stuff in. I think we might have to kind of do more of a themed webinar. Maybe it's with a few specific guys And for example, your trade management, it's kind of unique, and the way that well, it's not really unique, but maybe for a lot of others, but it's really great with the minis, and then also you're edging in and out of a position. I mean, I know Valley Fund, a lot of other guys are of course are doing this, but using the catching that falling knife, it's like, well, what the hell? I'll put in a couple of micros, and I will likely get it because I've seen it and I've studied it a million times. And but then how you kind of add into it and then really knock it out of the park. Because I'm sure that you're those two or three in the beginning, like maybe they're high probability, but to go over that point of like, yeah, I'll get knocked out of those, more often than some of the others. But once you, it's worth it, because once you get in and you start adding into it and then taking some out and then adding some more in, you're just going to have one big trade that just totally obliterates all those little small losses that you might have.
Yeah. And, I do something, I'm sure everybody has their own name for it, but, price discovery, right? So when you start coming down to an area of interest, whether it's, liquidity zones or other order flow type stuff, VWAP, ATRs, whatever it is, when I start getting into an area, and some of it depends on the trade setup, right? I do have very specific structural trade setups that repeat on a daily pattern. So I see those occurring, and I'm just really good at identifying my own patterns that I use day in, day out. So if I'm really confident in that, I might leg in more. If it's one of those where I'm not so confident or I don't see quite as much confluence, then I'll do more of that price discovery type scenario where maybe I leg in between 3 and 6 micros, right? Like, let's just take a look at the first big green dot down there on the low of the first VPI spike. A lot of times, if I take 3 to 6 micros right there, as soon as I see that I start to get that impulse move up, right, from the low to the high, I will add on the breakout. So a lot of times, depending, and I move the chart throughout the trading. So sometimes I'm looking at a 15-minute on Bookmap specifically. Sometimes I'm looking at it at a 5-minute, and sometimes I put it down on a 1-minute. Obviously, this is a 15-minute type window, so you don't really see the W, but you'll notice on a lot of my trade setup pictures, I put just a W in parentheses down there to show that I'm seeing a breakout, right, out of a W. Maybe it's a W coming out of a Wyckoff spring type action, or maybe it's a V-shaped recovery with a little double bottom that ends up giving you a right-sided pivot rule with a lopsided W to the right-hand side, if people know what I'm talking about by the right-sided pivot rule. But I will add on the breakout of the top of the W, right? And I will do it very quickly so that I do the price discovery at the bottom, and as soon as it breaks out of that W, I start adding immediately, and then I just continue to leg out. And so from there, if you just travel from the 8:45 over to maybe 9:05 time frame, I'll leg out up to that point right there. Yep, you see where that sell volume starts coming in. And what I'll try to do is keep a core position. So I don't know, let's just say I had 6 micros, okay? And I legged out of 4 of them, maybe 5 of them, and I'll keep 1 or 2 if I feel like the pattern is something that's going to continue up. So I had 6, I leg out of 4. By the time it gets up there, I hold 2 for the pullback, and then I do the same thing. I get that market pulse VPI spike right there. And as soon as I get, whatever shape it is, the W or some part of the impulse move with volume that you see coming in there, then I add it again, but I'm adding to a core position that already started 20 points lower. So I'm able to dollar cost average, kind of. I'm not really, there's a difference between adding and there's a difference between dollar cost averaging. So dollar cost averaging would be you're buying at a second location below your first initial entry. Adding is you add on top of the lowest position you're at, leg out, get a pullback. You still have a core position from your original entry, and then you can add at that second market pulse VPI there. And so you have again lowered your dollar cost average a little bit by keeping one or two from your original position, and then you just get to leg out. So maybe I added another 6 there on top of the 2. Now I have 8 more that I can continue to leg out. So, each situation's a little bit different, but that's a way that you can leg in and leg out without actually DCAing and taking a loss. You add to a winner, you leg out, you keep a core position, and then you add to a core position at another key position, another key price location.
Yeah, yeah. This is exactly what we've been trying to go through, not only in the webinars, but or the all markets webinar, but foundational order flow, but like also in this Bookmap Academy. That's why we want to see the trading from the chart, because then we can get that insight. What you had covered in here, like there's going to be some sort of like little double bottom or a little something. Usually, it doesn't have to be. It could be a V, but there's usually something like you said, and it might be this kind of skewed W like this. Once you see you're reacting off of this little micro order flow event in here, or market, micro structural event.
Yep.
And here's you might get your your volume spike here on market pulse, and then it comes back up, it comes back down again. Maybe you get divergence or something, and then you start seeing that volume come back in again, and this is where you're getting aggressive.
Exactly.
And this is just beautiful, beautiful stuff, because this little event in here, then you're out up here. You've taken it, this would be up here in your on your image. You get out some, you look for your high liquidity or your levels. You get out some. Now, if it comes back, you're adding in, and you're looking for other excuses to add in. If at this point this goes against you, let's suppose you see another one of these things and you add in another few in here. Even if it goes against you, you just might have a scratch trade, right? But
Exactly.
you were prepared for a big winner, and then days like today or yesterday, then you knock it out of the park.
Exactly.
So it's really great. And now we're talking about not just a setup, we're talking about trade management and order flow. And it's something we've been trying to harp on or cover in here for a while.
Yep. And there's nothing better than Bookmap for this, in my opinion. What you can see with the order flow is unreal. I mean, it's incredible. And the more time you can spend looking at it and using it as confluence with whatever else you use for your trade setups, the better, in my opinion. So
The thing that I also like is this fighter pilot like mentality and getting aggressive on that trade, like seeing that order flow, and you're like, okay, I'm getting in hard here. It's confirming it. You've already got maybe a couple on, and now you're going to put a bunch more on. Then you're going to take some off, and just going for it.
yeah.
Really,
Well, the other thing I do is I trade the NQ next to like if I'm going to trade, I always have an NQ chart and an MNQ chart. So the mini and the micro next to each other. So sometimes I might do the price discovery with the micro. And then when I'm confirmed with the micro that it's doing what my game plan has told me to expect, then I will maybe leg in with the minis at that point in time and be able to capture more money over a shorter distance using the minis as opposed to the micros. And then maybe I get out of my minis a little bit earlier, but then I hold on to the micros for longer. So I do kind of a double tap type scenario between the minis and the micros to take advantage of legging in and legging out, and in some cases holding a lot longer. So this happened to be the I think this was the micro part that I had showed you here. But I usually trade the mini and the micro side by side.
Nice. That's great. Yeah, great stuff. I don't know, Stan, anything else you want to add?
No, that's perfect. Yeah, just maybe like how, yeah, we just went through, but how you would, in this case, for example, where would you consider then the trades that you would cancel the trades, then you would take your loss?
I'm sorry. When would I consider what?
Yeah, when you will take your loss in this case, for example,
Oh,
it would be great to have maybe an explanation before, like maybe something part of your setup about when you would consider to take your loss, or if it's yeah, even if you mention about the 4 tick, the
yep.
4 points about NQ, but times to times it seems like you're trying to scale in. So I was just wondering.
Yeah. So I do a kind of a combination technique of looking at whatever. So if you look at just to the left of the 9 o'clock, right, 8:55-ish, that little low pull backwards, there's the 223 iceberg lot there, just to the right of your pen, right there. Okay, so see how price came up, and then you just have that very small pullback right there, right? The two red dots coming down. So I will use that low. So after it starts to bounce away from that, I will bring my stop from, let's say I'm using a 5 point stop below my original entry there. I will then raise my stop up above that next low there. Yep, right there, Bruce. And then I put my stop right there. So if on that pullback, the add, right, that add was above where my current stop is. So I feel very safe in adding to that second location there where the 297 stop is, that your red circle where I added on that second market pulse VPI. Now, as price goes above there and I start legging out, then I move my stop to right below that line, right? So I use fractals on my I trade off of a 1 minute and my actual order flows off of a 1 minute and a 10-4 Renko chart. And then I add fractals to it. So I get that little Bill Williams fractal ball or triangle, whatever shape you put it, at the bottom of the candle. And I just keep raising, for every leg up, I just keep putting my stop either below the next fractal or below one of my ATR lines, because my ATR lines ratchet up. So instead of just having you can see in the picture there, right? Look where my lines to the left are. They ratchet up. So I might follow one of the lower bull ATR lines and use a combination of following below the ATR or the next fractal of the next level as it moves up. And that's how I just kind of keep moving my stop up, whether I do it mentally or I actually move the stop. So in this case, you don't actually see me move the stop up much above. I think it's 211 there roughly. But I'm watching obviously those lines as price goes up, and you can see the little white balls right on my screen on my ATR chart. If you just went up there, yeah, see, those are fractals. Those are Bill Williams fractals, those little white balls at every pullback. And that's part of what I use as, when I say learn to earn on the turn. The Bill Williams fractals will develop on the second candle close after that immediate low. So you basically get two candles on a 10-4 Renko chart that will show you when that fractal will develop. And so I just keep trailing those fractal balls all the way up as they trail my ATR lines, or just just support lines as you see price going up. Whether you have ATRs or not, you can just see off the Bookmap chart, as I explained, for every low that happens, it's a series of higher lows, and I just keep pulling my stop up above the next higher low. So then I basically can never take a loser. And if I added on that second one and it was going to start to flush below me, my stops are at break even. So I have a rule usually that after I get 8 to 10 points, I bring my stops to break even. So if I'm using a -5 point, stop, once I get 8 to 10 points, I'll bring it to break even. So if I add it on that next one, the worst case scenario is it comes and hits the stop that's over there at the 8:45 timeline. So it's very minimal risk. And other thing is, when you become really good at sniping, I have a saying, hand on the mouse, right? If it looks like it's going to flash against me, I'm not afraid to get out because this is a game of attrition, right? It's the last man standing who's going to win. How long can you keep and preserve your capital? So to me, I would actually rather take a stop out and be wrong because it just did a little bounce against me and then it bounces up and continues the way I want. Well, then I'll just get back in again at another good location. I am not gun shy at all about stopping out and then 30 seconds later getting back in if I need to, because I'd rather lose $50 or $100 and then get back in and make another 1,000, and I've only lost $100 because I'm willing to get out and then get back in.
Yeah, that's perfect. Nothing more to add. Thanks.
Okay, thanks, Stan. And just wrapping up here, I wanted to show you. I don't know if you saw this crash, but this is exactly what I wanted to go through the in here. Oh, the playlist right here. Axia Futures. We had a webinar. We've had a couple webinars with them. So we have a new one here, how to place your stops, and he went through exactly what you're talking about. So on a day like today or yesterday, he's looking for a runner, or in this case he was looking for a breakout. This is where he get in, or I think even higher. No, this is it. I at a starter position here. This is where he wanted to get in. Look at that entry. It's horrible. It's right into high liquidity. But this is what he's looking for. It was a little bit through that high liquidity, which is the entry point for him. And then it's still trading, and then just take that stop, and here, just move it up. Here's where it traded into that high liquidity. Here's that high liquidity back from offer to bid. This is where he moves it up. Here it is again here, moves it up. Here it is again here, he just moves it up. But he's trying to give it breathing room here.
Yes.
So because he wants a runner, and he does not want to get knocked out of here because he knows it's hard to get back into days like this. Anyway, great stuff. And it's very similar. If you haven't seen it, just recommend it.
Yeah, I watched the first Axie one, but I don't think I've seen that one actually.
Okay, here I'll put it into the chat for you guys. And let's thanks Crash. Really great stuff. Great to have you back.
All right, thanks guys. Have a great day.
Okay, you too. And let me put this into the chat for you guys. Okay. Also, YouTube. Hold on. There you go. That's the Axia webinar. And let's see here. We wanted to move on, and let's see. I think we're going to go over Caesar next. Let's see here. Do we have Caesar? Oh, I think that's you, Stan. No.
No.
Let's see here.
Yeah, I have Vinny5, CMG, and Shark Blue.
Okay. Shoot. Caesar, I don't think we have you covered today. I'm sorry.
Moby?
Where's it? But this is Moby's here, isn't it? No, not that one. This one.
Yeah. Yeah, that's
This is Caesar here.
Yeah.
Okay. Okay, great. All right, Caesar, if you're still in here, jump up on the stage. Got you.
Good afternoon, everyone.
Hey, Caesar, how are you?
Good, thank you.
Let's see here. Why don't you walk us through this trade now? We'll give you the file here, or you'll find it over in Discord. And Moby gave his feedback in here to you, so so you can read through it in here. But I maybe you know, we got you on the mic, so why don't you kind of explain it to us, and we can give you some feedback.
Awesome. Yeah, so I've been trading a lot more futures lately than stocks. Like when I first joined Bookmap, just seeing the order flow on futures and what I've learned from the educators and your sessions has been great. So with the funded accounts, or the prop firm accounts, I've been giving futures a shot and really using the VWAP strategy with the standard deviations and just looking for a level to level move based on the volatility and how the market's trading. My lack of ability to hold for target has still manifested itself in futures, but still working on it. On this one, you can see nice pop uh, to the level that I was interested in, the standard deviation. I still follow the where, when, and how methodology. So my where was that standard deviation. My when is when I saw exhaustion along with sellers adding pressure on the heat map. So you can see that first attempt, there was just a little tiny print. And then on the second attempt, the lower high, the buyers couldn't lift the bid and nothing printed there. Also, what is even better to read on futures for me is the volume histogram. You can see even though we were ascending, the whole time it was on declining volume down there, right? On the histogram. So that gave me the conviction I needed for a short. I got in and I was looking for the previous lows and the large liquidity to the downside down there that had been in the book for quite a while. But just like the histogram was showing weak buyers on the way up, it was also showing weak sellers on the way down. Not only on the histogram, but on the volume dots, you can see there was like no big red dots, and the CVD was also increasing. So I just decided to take my profits really quick down there after I started seeing sellers exhaust. Just tiny prints on those lows, right? And yeah, it eventually got down near my target, but it didn't hit my target, and it reversed from there. So yeah, like I posted about this trade. It's what you showed, that slowdown is put together as well. Like, you start looking for all these things and eventually you just simplify it down to these super basic things, especially on the future side.
Yeah, that's great. I mean, really interesting trade, really articulate as well. Your explanation here, it's very odd in essence because so what you're looking for, it was really the setup was your standard deviation, and
Yeah.
well, you got high liquidity in these areas, and none of it traded. It looks like, but you have your level, and then you have your entry. You're not very much trading up here. Um, Not a whole lot of selling in here for this little pullback, and then but there's no buying up in here, and it's a lower high. And then once you saw that, then that's when you're willing to take some risk. But what I really like here is, I mean, basically this is an impulse move, but it's hitting your level. This is where you want to trade. You have your ideas why. You're getting in. and then you're looking for taking it down to, you know, wherever it might be, if it's, you know, bottom of here, or this liquidity, or, you know, maybe in here, whatever it might be. But you're basically, if this were a flag pattern in here, which it's hard to, it's complex, it's hard to see, kind of, I mean, you can see it's back and forth here, but you're taking the pullback, you're recognizing that, like, I know I'm in the low volume pullback in here, therefore I'm going to start looking for an exit on this. So really great trade.
Thanks, Reese.
And yeah, oh yeah, here's your initial target down here, right? And you're thinking, well, what are the probabilities of it getting there? Now, it almost got there, but you're like, no, you know, this was, I think, a really wise thing to do, was to take your profit, especially in front of here. You got a little pocket of volume on the buy side, and then looks like you took your profit as soon as you started to see some of that buy volume coming in here. You're like, no, this is not convincing here.
Yeah, those straight vertical moves down that have, you know, just, again, they're vertical down, especially in futures, they tend to get retraced so much. So while it's fun to see it go in your way, it's just, I've seen it way too many times that those tend to get retraced, and especially when there's such weak selling behind there, right? And you could argue that there was reasons to stay in because the buyers were still weak, right? Just hold to my target. We're in a massive downtrend. But there was also, I think I definitely had some confirmation bias looking for reasons to get out.
Yeah. No, it's great. I mean, you got your bigger picture over here. You're looking for something specific in the order flow in here. You didn't see it, and you're like, no, I'm out. I love it. I love it. The order, you very objectively followed your plan in here. The order flow has to support the trade idea. If it doesn't, you're going to exit. Yeah, really great. So let's see. I know that you and Valefan have been following this guy. I forget his name. Not Trent.
Thor Young.
Yeah, Thor Young.
Yeah.
And so I don't know if have you abandoned the Camilla pivots?
The cam pivots?
Yeah.
Well, there was when we were just going straight up, they just, the market wasn't responding as well to them. So, you know, you got to find a different strategy for different times. And yeah, it just, seeing the order flow on futures being so clean, and me having kind of the scalper mindset, you know, always said I have trouble holding, you know, I decided to give futures a try. But no, by no means did I abandon the cam pivot trades.
Okay. Yeah. Let's see. I don't have anything else. I see you're also confirming with CVD in there. CVD wasn't helping you. Everything was like not really helping you here. It was helping you exit, basically, but not looking for the continuation. Stan, do you have any kind of comments or questions?
Well, I said everything. That's perfect how you use the order flow. Yeah, that's great. The fact that you exit and you took, you lock your profit, and you were right. It went clearly against you. You had all your reason, all your setup. It would be just maybe great to see your trade through Bookmap, and yeah, nothing more.
Thanks, son. I have a couple through Bookmap, and like you mentioned in your webinar, Bruce, seeing, like, going back and seeing exactly what you were thinking when to move, like when I moved the target, when I adjusted my stop, like it paints such a nice, clearer picture.
Yeah.
But yeah, without the trade, with now using Trader Map, if you go back to last week when there was no algo during the day, I had trades with Bookmap, but now with Trader Map Pro, it's not as easy to show what I was seeing
Yeah, yeah,
on Trader Map Pro.
yeah. The Trader Map Lite
Yeah, Trader
is
Map Lite. Sorry.
is the free version, uh, which you will be able to trade from, in some weeks. Put it that way.
Awesome.
Yeah, yeah. I was going to mention something else. No, I just think. Oh yeah, one other detail here that you had mentioned, and that is about slowdowns. A process in here that he documented so nicely about first when you're Bookmap Academy applicant, you're likely over here. You're mentioning many different elements, starting to understand these elements, and just marking them up, and then knowing what they are. And then the second, and you can see the months in here, which is really great. So from May and then in July, it took them about some months to get to this point to now have context with some of these elements, starting to understand the important elements that matter to him or resonate with him, to give him insight to where price might be going next. And then he takes it finally a few more months after that into a very tight, concise, studied focus here with a trading pattern. He's got an image up here. He knows exactly what he's looking for. And this process is beautifully documented here. I really like it. And this is exactly what you had mentioned. You are going through that also here in your image. Basically, you're looking for just a few elements in here, and you just articulated perfectly. Like, this is what you're looking for, and you know it. And it made your trade management was based off of that as well.
Yeah, I felt kind of bad uploading that one because it felt too simple. But if that's really all there is to it, it should not be more complicated, right?
Yeah, I mean, it looks really simple, but there's a lot behind it. So that's what we're here for in the academy. Start to go through that and help out maybe, and again, for everyone attending, maybe there's something that resonates with you in here, or maybe you think it's oh God, that's ridiculous. I don't trade that way. Okay, whatever. Maybe the next guy we cover, next person, there's something there. If not, make your own content and we'll invite you to the stage. So I think that's all we have for you, Caesar, today.
Awesome. Thanks, Bruce.
Okay.
Appreciate it, Stan.
Yeah, great work. Thank you, Caesar.
Thank you, guys.
Let's see. I think Malak is back. Is that right? And his mic is working well. So let's see if we can get him. He's down here. There you are. Hey, Malak, are you there?
Hi, good afternoon, everyone.
Hi, can you hear us?
Yes, I can.
Okay,
Yeah.
okay, excellent. Well, you've been very busy, a lot of documenting, going through your markups on Bookmap. And why don't you maybe give us explanation behind some of your markups here?
Okay, so the green lines, right? The first one on top, that's minus V1. The one at the bottom is minus V2, right? So that's anchored from the European session. So let me just give a little context of what the trade, how it developed, right? So on this day, we had sold off from the beginning of the open in the RTH session. And when we came down to like around 10 o'clock, that's when price started to move sideways a little bit, auctioning sideways. And it had pulled, sorry, it had moved sideways across between minus V1 and minus V2, right? So I have a strategy that I'm developing where it's called the bold and green strategy, where I look for a cause or an auction being built between minus V2 and minus V1. And then I take the breakout of minus V1 back to VWAP and probably plus V1, right? So on this day, the selling was too strong. And those gold arrows right there, that's actually me trying to catch the bold and green strategy. So to the top right, those two, that's longs, right? And that actually failed. And then I actually flipped to another strategy, which is the 360 fire strategy, where within a downtrend, I'm looking for a retest of minus V1 and then cascade down to minus V2 or probably lower. So in actuality, if I had started off with the 360 fire strategy, I would have entered short much earlier than actually going long.
Okay,
If you
so this is where you went long up here, right?
yes,
Okay,
yes,
and then this is where you covered and then went short.
right. So the first purple one is a cover,
Uh-huh.
and then the other two is going short.
Right.
Right.
Okay.
That's the cover. Right.
Okay. Okay.
And now in hindsight, if I had waited, because I kind of tried to catch the momentum of the short, if I had waited, I actually got the retest of minus V1 for the 360 strategy right there.
Up here, yeah.
So that's where it's like a mistake, because I'm kind of flopping between two strategies, but I should have I don't know how to determine whether I should use the bold and green or the 360, because I guess I have to kind of gauge the selling pressure is the factor that's going to determine which one I take. So, yeah.
Okay. There's not a whole lot of selling pressure in here. Yet
Yeah.
it went to the downside, and it looks, it broke here basically. I mean, this actually looks like a good idea to me. I mean, I don't see much to the left. I really don't know. But
It was a lot of selling from the beginning of the open. It was like 40 minutes of selling before you saw that.
Okay. So this was just a little bit of a pullback, and then you got the continuation move basically on the downside. Yeah. Okay.
Yeah.
Okay. All right. So you're using your VWAP and your standard deviations in the VWAP. And this is kind of your market structure, what you're using, and then you're jumping into the order flow within that structure, basically.
Yes, and I also use Camarilla and flow pivots to kind of correlate with the VWAP deviations. So if I'm getting like a minus V2 at a Camarilla S3, it adds more confluence to the reversal.
Yeah. Okay.
Actually, it's not there right now.
Okay. So a few confluences, and then there's something in here. Well, first off, I think this is also something like Jack gave you a lot of feedback in here, as you can see.
Yeah.
Take a read through that, and see what Jack had to say. The other element in here, like this, it's really hard to read. And like, I don't know about you guys, but like even the colors in here, like my eyes are kind of popping back and forth. But maybe dim the heat map a little bit. And this was actually another thing Slowdown had done in his documentation. Which I think there was even exact wording. We got to slow down in here, so maybe we'll go over an image. But I think Jack had covered slowdown as well. But he said that he was refining this content with intent and purpose. So
Okay.
that the way that it looks and the way that he was simplifying it here graphically with intent helped also. As you can see, I mean, look at this over here, marking up all these different things, refining it with intent, and then really refining it into like a basically like a almost like a work of art. So it's like it's very concise, to the point, and that this iteration process helped him understand exactly what he's looking for in his trading. So
Okay.
just some thoughts there on your documentation.
Sure.
Because
And actually, for my cover, I actually used the weekly Camaria S3. So if you could look just to the side there, you could see it's in the notes. And that's around where I was looking for like a bounce. So any bounce at that point, I would exit the trade, and I did.
yeah, this was the thing that also caught my eye in your trade here, which is fantastic. Look at the heat map. You had your target in here already. You can see it was originally here, based off of a bracketed trade, and you moved it to where? High liquidity, right?
Yeah.
And you waited for it to work out, and it nailed it.
Yeah.
And that's really, really great to see. This is where Bookmap can give an edge, because
Yeah.
is this hitting your standard deviation lines over here? No, it's not even close.
No.
It's high. It's all about the liquidity in here. So yeah, great stuff in there. I love seeing this.
Thank you.
So I don't know. Let me turn it over to Stan. Stan, do you had any kind of comments you wanted to go through?
Yeah. Yeah. Overall, that's a great trade, great catch, really. I think I don't know if you try the trader map little. That might be more helpful to look for the liquidity. And then I think it would be maybe a good idea to add more zoom view about what happened in the movement, or to really add like what you see about the order flow that gives you the confluence to enter in the trade.
Okay.
And for the histogram, I would maybe suggest to trying to play a bit with the settings to find something that you can find maybe useful, because it can really be helpful to use it, and it would be great to have maybe some confluence with it.
Okay.
But great trading, great target. Yeah, overall, yeah, just great trade.
Thank you. Thank you very much.
Yeah, another thing too, I liked your stop management in here, moving it. You can see it was here. This is why, again, guys, I keep Stephen and I have been going back and forth a little bit, but with some ideas on the trading from Bookmap. But you can see not only the take profit down here and the reasons behind it. It's plain as day. He doesn't need to really explain anything. But then you can see his management in here. So he moved it up. Where did he move it? Top of the range in here. And oh God, now I lost track of it. It's here.
Right there. Right there.
Yeah, there it is. There it is.
Yeah.
So, and then you moved it. You're moving this down and trailing that down too. So
Yeah.
you're going to get a good fill down here on your target. So yeah, great stuff. So actually, so one of them was your take profit, and the other one was your stop loss. Is that right?
The first one was a partial, and the second one was the trailing stop.
Trailing stop. Yeah, exactly. Yeah, I think the trade management in here is real nice.
Thank you.
Yeah. That's all I got for you, Malak. But you've been really showing a lot of energy in the Bookmap Academy. So thank you. Great stuff.
Thank you. I'm trying to match those guys inside there. Those guys are good, man.
Oh, it's tough. I'm telling you.
Yeah, it's tough.
Excellent, excellent. Keep it going.
All right. Thanks a lot, guys. Have a good one.
All right. Bye.
Bye.
Let's see here. I think is Rob Davis in here today? No, I don't think he is. I think he was earlier. I do not see him. Okay. Let's see who else. Questamondo. God, we wanted to go through you the other week, and you weren't in here, so we bypassed you. See who else. And then Rob, I know you're up soon. I don't have anything for you today. And a lot of you other guys, and Alan, I know you've been away. I think what we're doing in here to go through a lot of the content is we see you in here week over week, which is fantastic. And we're happy to go through your content. A lot of you guys are showing up in here on Thursdays, but you're not filling out your spreadsheets, or you're not putting some of the content. So we don't have much to go over. Just to let you know about that. Yeah, there's a few that applies to, so keep coming. That's great. But if you want us to go through some of these things, then start filling out the spreadsheets, put in your content, and we'll be happy to cover it. That's what we're here for. Let's see here. Who is next? Let's see. Slow down, I think. Yeah, I know that Jack covered you slow down. We got DNT matter as well. So Malak, take a look at this in here. Now, this I'm sure we'll get to you in just a minute. We'll get to you next, I think, DNT. But just look how clean this is, and I'm sure that this is helping with your trading. You're able to very cleanly and clearly understand what you're looking for, and then that will help your focus as well. And this is exactly what Slowdown had done, being able to not only take it from here, he's able to make it into a diagram. Once you got it into a diagram, you really understand exactly what you're looking for, I feel, and because now you know what that pattern looks like. Anyway, this is, I think, Jack's as well. Let's see. Slow down. Why don't we try to get you on stage here if you want to. I know you said very articulate here, but it'd be great to hear it from you. Let's kind of get you up here if you are interested.
Hello.
Hey, welcome back.
Oh, thanks.
So let's see. Why don't you walk us through what you're looking at? I mean, the clarity is what I just mentioned, but it would be great to hear it from you.
Yeah, I mean, I don't know how much I can really add. I'll say that I'm spending a lot more time looking at the higher time frame charts lately, spending a lot more time in like the 30-minute and the 4-hour chart. And then I'm kind of picking levels off there and trying to wait for price to get a little closer to that before actually taking a trade. So in this example, like we kind of open on the vertical line, and we drop right to the call wall, which is like a big, options positioning level. And we had a pretty like kind of firm rejection of that. So as soon as we rejected there and we started moving higher, I was like, okay, well, let's look for long and try to get up to that turquoise line at the top is the prior high a day. So that became the ultimate target. After we rejected off the call wall, I thought, how do we get up there? And then as the session starts going, maybe 15 minutes after the opener, so it starts to look like a flag pattern to me. And then just take a swing at it. And I think like the more I do it and the more I repeat these patterns, the more I've kind of come to terms with sometimes they work and sometimes they don't. And just like anything, you just give it your best shot when it starts to fit the thesis. And so the trade is pretty basic. I thought the bid was being supported by liquidity. It pulled back right to kind of the overnight high and was building a little volume there without moving too low. So I figured it was worth taking a little shot at. And in this example, I think I just went all in, all out, about 6 points or so on the ES. Because if you look at the 30-minute chart I posted down below, you can really see we've had a lot of resistance right in that area, that kind of 5605 area. And so I was willing to just get out there. And if I recall, that ended up being at least the temporary high a day. So it felt like a nice exit. But, I'm just trying to work those patterns in that I kind of usually post. And then I'm starting to look a little more at the higher time frame to just kind of pinpoint areas that may or may not have a reversal or a large pullback. And in this case I was just targeting that. And I don't know, buying looked pretty strong like the whole way through, and the selling didn't go very far, so worth a shot.
No, great stuff. So is this the where is the trade that you took on this candlestick chart?
The entire trade will be in the furthest candle to the right because it's a 30-minute chart.
Okay.
Yeah.
Okay, so that little flag is in here.
It's all within the one single candle, actually.
Okay.
I think. Okay. And what I'm doing is just showing that was the real target area for me, based on like you can see, right there, and the prior day we kind of just kept rejecting off that zone. So I figured, like, sometimes it's worthwhile for me to take the profits there. So the whole trade was based on getting back up to test that area, and I didn't know if we were going to shoot right through it or if we were going to reverse. And so I find if I can bank a win early in the day, even if it's not the biggest, even if it's not the biggest points return, if I'm sitting on top, then it gives me a little more confidence to try and hold a runner later in the day, if I've got a little cushion to trade off.
Yeah, totally. I mean, I totally hear you on that. That's the psychology part for me as well. Like, just try to be a little patient in the morning and look for something good. Get a winner, and you'll, you don't want to get overconfident, but because you have a few winners in a row, and then you're like, oh yeah, I got it, and that's when you just can get hurt. But get a winner or two under your belt, and you'll be able to look and read the charts more objectively. So I love the high time frame study slowdown. Getting you're kind of have graduated from, I wouldn't say graduated from lower time frames, but the idea was, and still is, to look at the lower time frames, gain a bunch of experience, like just playing poker or something, lots of hands, play lots of hands, and then you're starting to now look at the bigger picture and go, well, why am I spending all this effort on some of these smaller trades when I can just kind of step back and look at the bigger picture and wait for something pretty nice to unfold. that has the potential to be a bigger runner. So yeah, really really like your evolution trading.
Oh, thanks. Yeah, a lot of it came from like I was really working on the reversal trade for a while, and I was having a lot of success with it. But then I realized I was just kind of looking for a reversal everywhere, and it just got exhausting. So I started kind of spending a bit more time on the higher time frame, mapping that out, and then when price gets to that area, looking for one of the patterns that I've been kind of drawn up for a while now. And so in this case, it was mostly just about getting to that target, and it just seemed so likely with the way the last couple of days had played out that that we'd make a test. In the overnight session, you can see is the second kind of shaded purple area on that higher time frame chart. It was just buying and buying and buying, so kind of rode it up. But yeah, I'm just trying to find a way to, like, as weird as it sounds, like relax a little more while I'm trading. And if I'm going to sit at the computer for 6 or 8 hours, I don't need to stare so intently at every little piece of short-term order flow. And because sometimes I find that was like, you're really good at it in your webinars, you're right in there and you're making it work. But sometimes I found I was getting head faked out on things that I knew shouldn't be causing me to enter or exit a trade. And so I was just working on building up my my patience and my ability to sit in a trade. I had a couple trades lately that were over an hour long, and I certainly wasn't doing that a year ago. And sometimes you sit in there for an hour and you lose, or you sit in there for an hour and you break even, and you can see how you could have maybe changed things along the way. But it's all part of the learning curve, and just looking to find something that I can kind of just relax and enjoy the process a little bit more.
Yeah, I could see you running some sort of hedge fund in the years to come, and with several $100 million on positions, and you're just kicking back and relaxing.
Yeah, only if I can stay in my pajamas.
No, it's really great. Slow down. I mean, like I'm just reiterating. I really like the process. You mastered some of these order flow setups, and then now you're looking at bigger picture. I mean, bigger picture is always a part of it, but like, now you're trading kind of bigger picture ideas here. I totally agree with you. I mean, with this kind of momentum and move up, it looks like inevitable. It will at least test up into probably here, but like this whole zone looks pretty dang good. You just let it unfold. I mean, you can see that this was that pullback in here on that candle, but it turned around, and this kind of volume came back in, and you're just waiting and watching for it to unfold. So yeah, really great.
I mean, in full transparency, like yesterday, I did the same thing. I identified a few areas I expected to reverse, and I took a couple longs when the entire market was short, and I got smoked, and I didn't even feel like journaling it. I just walked away for the day, and when I came back in today, I applied the lessons that I learned yesterday. I joined the trend and did pretty well. So like the strategies don't always work. Like I had a couple areas marked out yesterday where I thought to myself, like, this makes total logical sense for a little bounce. Buyers would come in right at that level. I'd join them. 5 minutes later, I was, out of the trade, and we were down another 10 points. So, it's still a work in progress, but it gave me a lot more confidence to get back in there today and, learn from my mistakes. And if the order flow is not really confirming the location, then just stay out of it.
Yeah. I mean, the only kind of advice or kind of feedback I can give you, I think, is on these last few days, or when you get some of this volatility and this kind of back and forth at a certain level on the higher time frames, you'll get these bigger swings, and instead, like you might be looking for, oh, here's the ATRs. It's somewhere around in here, this kind of movement, and then you get this, right? And it can wipe you out. This happened to me on the webinar, and I was like, just keep it open, let it run, and it just kept going. And I'll cover maybe some of it tomorrow, because I think you have to step back. You have to look at the environment, what's going on, and then reduce your risk. However it is, if you're going to only scalp these really small little ranges, or if you're going to look for these bigger ranges and try to get runners on it with, maybe in micros or something, or smaller size. But because it can be really frustrating. It's like, oh, this looks perfect. And it just doesn't matter. The larger players, or you just get this huge volume that comes in, and then it just blows away your setup. It doesn't always work, and again, it's due to the participants. I mean, it looks good, but this flag pattern. What if it, right in here, it just trades up to here, rolls over, and you get all the selling in here. It comes short of this up here. Maybe it hits some high volume node in there, and then rolls over. Here's your high volume node right here. So
I've experienced plenty of those too.
yeah, and that's where it's just risk management.
You can see my stop in there is about 95ish, so about 4 points down, and about a 6-point exit. So it was about 1.5 to 1 risk reward there. I'm just trying to keep it at least 1, sometimes a little over 1. My win rate is substantially higher than 50%, but my risk reward is sometimes end up being just under 1 if I scale and then miss the second runner or something like that. So I'm trying to balance the win rate and the return right now, and just find the happy place.
Yeah, I can see you moved your target up here, right?
So that would have been 1 to 1.
Okay.
Would have been the original, just using the bracket order.
Yeah, you're just using brackets there. And then you move. You'll manage it at that point. Okay. Well, I've already spoken, I think, too much. Stan, if you want to jump in.
Not a lot to say, but just great job. I really like what you do. Just keep posting. Thanks. That's good to see, like the options, the higher time frame analyzed, the order flow, the checklist, the management. Yeah, perfect. Thank you.
Well, thanks, Stan. You're one of the kindest people I've heard on the internet.
Yeah, Stan. I mean, it's true. I mean, slowdown doesn't really give us too much to talk about, to be honest. As it's all here usually, right in the image, very cleanly, clearly, concisely documented. And since we had him on here and he's been away for a while, I thought let's invite him up. Anyway, Jack gave you quite a bit of feedback here, so you should have access to this file. If you don't, we'll put it into the chat for you guys. And let's go over one more here. We'll go over, I think, DNT matter, and then we'll wrap it up for the day. So DNT, I think you're in here, and let's jump in. How are you?
I'm good, thank you. How are you guys doing?
Doing well. So walk us through.
Nice to hear. Slow down. Welcome back, man. I'm just this is one of my first ETH trades. I don't trade it much, but how long ago? So this was about 2 hours after 6 p.m. Eastern, and I just carried over an absorption zone from, I think it was RTH,
prior to that. And, you know, the absorption zone here from RT that I jogged over from RTH aligned with, yeah, that one there. That's the settle, right? Or the close. But that liquidity that came in the book aligned with the previous absorption zone from RTH. And just when the absorption zone aligns with the liquidity like that, it's a pretty strong indication to me that that liquidity is serious. And I didn't check to see if that liquidity above that was overhead was overlapping with another zone or not, but it did align with a naked volume point of control, and I decided that that would be a good target just to front run the liquidity there. And I just set the trade. I entered, and that was actually a pretty good entry, man. I got lucky on that. What I did notice about it is, since I don't trade ETH too much, I was kind of just chilling, and the market I was seeing was just respecting that level a couple times, and you can see I actually just booted up my Bookmap at that time. If you look at that, and then I was going back to check the RTH and jogging my zones over, and it just so happened to kind of line up perfectly. And by that time, buyers had already were holding that level. 1 time, 2 time, liquidity came in. Liquidity was up above with that naked volume point of control. I took the trade. Oh, and the NQ iceberg, that was beautiful support there as well in the correlated market. Okay. So, maybe you can't hear me. Let me see. Hold on.
Yeah, no, we hear you.
Okay.
Yeah. So this is the iceberg here you're talking about, and by iceberg coming at the same time, ES pulls back into absorption zone. Okay. And then so here this is an hour here, right? Yeah, this is well, your time, 5 to 6.
Eastern, yeah.
Eastern time, right? Yeah. And then it was I really like this trade. This
absorption zone was from RTH prior to this. Not that one that you see right there. This was maybe like Power Hour or something like that. I don't really remember.
Okay.
So this was before. I just kind of dragged it along because it was still being respected, obviously. So I dragged it all the way across. When they're respected like that, I usually drag them across, kind of like a higher time frame type thing. And they usually do actually respond pretty well. If they were being respected before, I drag them across, and they respond pretty well. But you like it. I was happy with it. After this trade though, it was actually really two-sided, and I got messed up. These did not work after this trade.
Yeah, it can be tricky. What I was going to lead to here is maybe this is if this kind of resonated with you, which I mean you notice something, you observe something. We talked about this with Robbed before. Self-reflection or reflection off of this here, and noticing this. You know, it's because these kinds of trades about the ETH here after the RTH. They can be massive winners. I mean, just massive. And it depends on how the day is setting up, and how it ends and how it closes here. But you know, if you see put some of these pieces together, maybe this is the trade for you. Because all you have to do is put it on at that point, and you just let it run. I know you got out here. I love the profit taking exits in here. Beautiful top, back to where it dropped from in here, top of the range here, high liquidity up here, you kind of waited for your little pattern in here based off of your zone. It hit this liquidity in here as well. You got a lot of really beautiful things in here. Obviously high liquidity as well, and that's your absorption zone down here, and they didn't even mess with it. So a beautiful setup and beautifully documented. This is that kind of clarity or intent that Slowdown had mentioned months ago. I don't know if you have any comments on that, like about has that helped you with your trading?
Has what helped me again? I'm sorry.
So you're
Oh, the minimizing? Yeah. Definitely. You're mentioning the minimizing, right?
yeah. I mean, how you're really focused on a few elements in here.
Yeah, it has. And actually, you know what? I want to shout out Sharanga, and I'd want to kind of see more from hopefully maybe we can review him sometime. I don't know. I think we did him once. But he trades with with these filters as well. So I'd like to hear more from him. But I notice minimizing helps out a lot. I personally I get triggered with these flashing lights and these sharp movements and stuff like that. So the dimmer colors are helping out quite a bit. Bumping down the bid and the ask colors and the volume dots and stuff like that's helping out a little bit, because when I'm seeing all this, and just being able to see those larger players, those larger trades getting transacted, it helps out a lot. So I do like the minimizing, be able to see the ICE interact a little bit better as well.
Yeah, great.
And the liquidity. So yeah, the triggering structure on this, I don't know. I mean, that's something I'm going to be incorporating with the higher time frame as well. Slowdown was focusing on the higher time frame. I'm also trying to focus on the higher time frame, but I needed to incorporate that with triggering structure, because there's quite a bit of higher time frame points that go on where I think something might happen, where I might be anticipating. Like I posted today in the academy, where I was looking for a pull. There was a large pullback already, and I was looking for a long in this location, in a certain location where higher time frame was, and it didn't happen. There was no triggering structure. There were just lower lows that were being created, and the market was soaking up liquidity on the bid, and it still didn't make a higher. It still didn't break the lower lows or the lower highs that were being made. So I mean, even though I make all these steps to make improvements to my trading, it still seems like I need to keep adding. I need to remember higher time frame, triggering structure. Then I need to like match the risk reward, and also looking at correlated markets helps as well. When you see something like the NQ adding trailing ICE there, to also in a certain location where it's being supported as well. So I don't know. It'd be nice to have all those things and then enter a trade instead of just entering on less,
Yeah, I mean, makes sense. I think one step at a time in your checklist, and then this clarity here. You're looking for a few things. You can add more later, but don't mess up your setup and your checklist. This is something you studied. You've taken it many times. It resonates with you. You've had success with it. If you start changing it, even that one trade, you go, oh, I'm going to add in this confluence. Don't do it. Stick with what you know. As a separate study, add in those other confluences or another confluence. And that way, like, you can always fall back to what you do know and what is working. And because you don't want to cloud up these things in your mind, and you won't know what to do. one thing will say this, and that new confluence will say that, and then you won't take the trade, and you should have, because it's something that not until you see it enough times that you can start to integrate it to your trading. Yeah, really, really beautiful.
Good point.
Really beautiful stuff. I mean, Stan, please.
Yeah.
Oh,
I find no, that's yeah, that's a good trade, good explanation. That's good to see the liquidity. Yeah, perfect. All the scale then you took, it went directly in your side, so yeah, that was an easy one. It seems it's good
Pretty
that you have
lucky.
your higher time frame. Obviously, I would say then I like to see some dots and some volume, but overall, if it isn't part of your checklist, that's good too. Yeah, that's all to say. That's great. You took your trade, you took your profit. Just repeat it, and yeah, do it small at the beginning. Doesn't matter, and you will quickly have the potential to scale if it's working well.
All right. Thank you.
yeah. I mean, I think I was just gonna. I remembered something that Stan had mentioned before about stops, because this one worked out great, and it gives you like this beautiful feeling of like, oh, isn't this great? Look at this, boom, 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 right? However, where's your stop? It would probably be down here, below this
Yep.
this liquidity. Now
Yeah.
the problem here is what is it from here to here, right?
Mhm.
And what if you get stopped out? And I had some losers. I had a few losers last Tuesday, and then as you guys know, in some of the weeks following, and some of the mistakes that I made, and where are you wrong, and then where do you take your stop? And if you take a full stop on this here, you're going to be down quite a bit. Because you're scaling out on the way back up. Now, if you only looked for up here, all in, all out, your risk reward is pretty good. But
Right.
once you have one loser like this, it's gonna take a few of these winners to get back into profit. So some trade management you might want to consider in looking into, like how you're going to manage some of these things. And I don't know. There was a few ideas in there from Crash that could maybe work well for you. Or I'm not really sure. I mean, your setup is really nice, from extending the RTH to ETH, and makes logical sense, and you got in and you nailed it. But yeah, I don't know, like, how to work out the stop loss management in here, because this is a mistake. I don't know, a mistake I've made many times. Is like, yeah, okay, this makes all good sense, but you just have a couple of losses, and it's hard to get back at that point. So I don't know, maybe scaling in, maybe you only got one in on here, maybe the other one's down here, and maybe you're even looking for like a bounce off of that area, so maybe you scale into it. So this would be partial, partial, partial or something like that would be the concept. And then you would only get one out here. Maybe you moved it up to the top of the range or something like that, or maybe you stuck with it here for that one. Not exciting trade, not a whole lot, but you didn't lose money. Just some considerations. You did a great job. For all the reasons that we talked about, I'm just trying to help with some feedback. That's all.
Oh, that's beautiful. Thank you. That's exactly something I've been trying to figure out too with those zones. Using is my R factor and entering like that when that zone has been tested. Boom. I mean, just that's a tough entry. It is, and I was like, man, that sucks. That entry sucks. This thing's gonna come back on me and take me out. I'm gonna have to like put my stop slightly under that zone. That way, if it starts going through that zone, it's most likely going to go to the bottom of it and take that liquidity, and then I'll have to look for another entry. So,
yeah.
No, but you're 100% right.
I mean, talk to Valet Fan, talk to Crash in the Bookmap Academy room here, and get the conversation going, because we've got a lot of great traders in here, and they're already doing it. Find out what works for you. Like, for example, a perfect example here between Crash and Valet Fan. Crash is willing to continue to add or get in as it's going against him, type of thing, as that kind of falling knife. He's got his zones. He knows what he's looking for. It's high probability. However, it is a starter position. Valet Fan does not like that. He mentions it's like, no, this is where I get in, and I'm making a decision. And psychologically, that works for him. And now he's going to scale out at certain areas. He doesn't like to scale in because it starts to go against him, and he's adding in. He's like, what am I doing? So there's different schools of thought, and you got two great examples that maybe can help out, give you some ideas. Two different traders who can give you some ideas.
Yeah, I heard Crash talking earlier. That was pretty good, man. Yeah, that's kind of how I was approaching this one. I was looking at an initial entry and then a potential second entry. I only got the one, but yeah, no, I got you. That's great. I'll have to review the Crash what Crash was talking about earlier too. But yeah, adding to a position that's going against you is tough.
It is, and then Valet Fan. I mean, he had a great example, which was a break even last time. Maybe that works better for you. It's like, no, this is what I do. This is my setup. I want to keep that clean and clear. And I don't want to I'm going to add also at this next level and add at this next level. Find out, what you feel comfortable with. And then you can turn trades like this, and if it went against you, maybe you'd have a small loser. That'd be it. Maybe like Valet Fan, the way he would manage this, and just bring them in. Basically, we got to wrap it up though, guys. I don't want to go over 2 hours on these. I really appreciate you guys being here, but I don't want to take up that's just too much time. Valet Fan is like, okay, I'm here, I'm in, and I'm going to start scaling out. And where does he get out? Well, probably here. He's looking for it to work, and then maybe he would scale out the same way in here. But then also too, he's like, if it goes up here and it starts to come back, and it starts coming back down like this, he's like, no, I'm out. Like, I'll take the scratch or maybe a small loss, and look for the next one. And a great way of trading.
And then there's Crash.
There's no stubbornness in that trade from Valet Fan. What he's doing is he knows what he's looking for. If it goes against him, just get out. and look for the next. Crash instead is looking for, well, first off, he's got the big trend going up, and maybe it's coming back down, and then it looks like on his charts, it looks like, you know, you're trying to catch this falling knife in here, but he has his reasons for it. He'll put some orders on. Well, sometimes I don't know if you're taken into it, Crash, but you're looking for this little order flow event in here, and then now you've got your volume pressure, your VPI in Market Pulse, and then in here you're just being super aggressive. You've got your higher time frame with your smaller time frame. Well, not super aggressive. I'm sorry. This is where you're getting in, and then I guess a few in here as well at the VPI, but then you know, then he's out some up here, looking again, scaling back in, and then, you know, he's out some, and then he's out some, etc. Working a position like that, so scaling in and out, and maybe that resonates with you. That's can be kind of tricky to do, but if you know what you're looking for,
right.
you can really. I think we covered some of Crash's where he had a losing setup, but he made it a winner anyway. That was some months ago. It was awesome. I mean, like, just because his trade management was really good. So anyway, I think
I'll have to find that.
Yeah, sorry, I've been beating a dead horse
no,
here.
That's great. That's very good. That's very good. Thank you so much. The R factor is probably the most important thing in working a position. If you're trying to work a position like that, yeah, that's really important. So thank you.
Yeah. Stan, any last words?
Yeah. And only one, and build confidence in your setup. Just don't be afraid to take it, and just have this confidence. Then it should work. So you have your stat, you backtest it, and you shouldn't be afraid or thinking like your stop will be taken. If you know that it's working, you will just improve. Then your money management will help you to improve your profits, and just do it.
Good point. Keep the risk small at first, or even practice it on sim or prop accounts, and then
and just have the confidence when you take your trades. Because you know that it should work, and you know exactly what you're looking.
Yeah. Thank you guys. Thank you guys so much. That was very helpful.
Thank you, everybody. We'll wrap it up on that with Stan's last word there. I think a good session. Really appreciate you guys. Appreciate the great work you're doing, as well as the coaches in here giving the feedback. Guys, we got something really nice in here. Let's keep it going. Let's add to it. So have a good evening, and we'll catch up next time. All right. Thanks, everybody. Take care.